nightly business report.
Good evening. Tonight, according to the central bank, April showed mixed trends in Sri Lanka's agricultural output, with increases in tea production due to favorable weather and decreases in paddy, fish, coconut and rubber. After a week of oversight by the Defence Ministry and the telecommunications regulator, the TRCSL is scheduled to fully operationalise Starlink satellite broadband services in Sri Lanka. On the third trading day of the week, the S&P SL20 and the All-Share Price Index both ended the day down, which causes the Colombo Stock Exchange to decline. And amid growing global concerns over the Israel-Iran confrontation and possible US participation, Asian financial markets were divided. A very good evening and thank you for joining us. Sri Lanka's agricultural output saw mixed trends in April with declines in paddy, fish, coconut and rubber, while tea production rose on the back of favorable weather. This is according to reports from the central bank.
Sri Lanka's paddy production for the 2024-2025 Maha season is forecasted at 2.62 million metric tons, marking a 3.8% decline from the previous season. Fish production decreased by 0.1% year-on-year in April 2025 due to a 30.5% drop in inland fishing, offset by a 9.7% rise in marine fishing. Coconut production fell 6.2% year-on-year in April but showed signs of recovery since February 2025. Rubber production also declined in April, affected by market uncertainties and trade tariffs. Global natural rubber prices dropped due to increased tapping activity and limited demand. In contrast, tea production surged by 23.0% year-on-year in April, driven by favorable weather conditions. The Central Bank of Sri Lanka highlighted these mixed trends in its agricultural sector data bulletin for May 2025. Officials remain cautiously optimistic that recovery in certain sectors will continue as weather conditions improve and market stability returns. Efforts to support the agricultural sector are underway to address ongoing challenges and boost overall productivity.
Sri Lanka's Export Development Board is collaborating with the Asian Development Bank to develop a national export development plan for 2025 to 2029. The plan will provide a strategic framework to guide the country's export-led economic growth over the next 5 years. It builds on lessons from the previous national export strategy, which was from 2018 to 2022, and adopts a data-driven, diagnostic-based approach. Key focus areas include market diversification, global value chain integration, and alignment with national development goals. ADB has proposed a methodology that emphasizes stakeholder engagement and a clear implementation roadmap. This initiative is part of ADB's policy-based lending program with Sri Lanka, targeting $36 billion in exports by 2030. The TRCSL is set to fully operationalize Starlink satellite broadband services in Sri Lanka following a one-week oversight period by the regulator and the Defence Ministry, according to TRCSL chairperson Varunasri Dhanapala.
Sri Lanka's telecom regulator TRCSL is set to operationalize Starlink with 112 technology kits already sent and the first 12 currently being distributed to customers. A one-week oversight period will follow, during which TRCSL and the Ministry of Defence will monitor the service for technological, security and service standards. TRCSL granted Starlink operational permission in July 2024 and validated 5 tariff packages in December. The Ministry of Digital Economy announced Sri Lanka's readiness for Starlink local launch on 31st May, though the government is still awaiting final dashboard access from the company. Digital Economy Minister Eranga Veeraratne confirmed these details during a meeting with US officials. President Anurakumara Dissanayake previously cited national security concerns and data access limitations as reasons for the project's delay. Despite earlier setbacks, all preliminary discussions with Starlink have concluded, paving the way for full service rollout.
A 500 million rupee sukuk, a Sharia-compliant bond, which is the first such issue to be listed on the Colombo Stock Exchange, has been oversubscribed according to its managers. The sukuk is issued by Vidullanka PLC, a renewable energy firm. Vidullanka offered 50,000 5-year sukuks, each at 100 rupees, with 2 options for investors. The first option is a fixed rate at 10.75%, payable every 6 months, giving an effective return of 11.4% a year. The second option is a 5-year floating rate option, will play in line with the average weighted prime lending rate with a 13% cap and a floor of 10%. Both fixed and floating rate of returns are given as a rental payment for lease, with the investors in the sukuk will be considered as the partial owners of the existing plant and machinery belonging to the Lower Kotmale Oya mini hydropower project of Vidulanka PLC. Let's take a short commercial break. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange slipped lower on the third trading day of the week as both the all-share price index and the S&P SL20 closed in the red. This decline reflects ongoing market volatility fueled by persistent investor uncertainty. For further insights, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you, Anuradhi. The Colombo stock market faced a significant loss today, driven by continued selling pressure amid heightened global tensions related to the ongoing conflict in the Middle East, now in its sixth consecutive day. The all-share price index saw a steep decline during the first 15 minutes of trading, but briefly rebounded due to bargain hunting as well. However, this recovery was short-lived as investors soon returned to a selling stance, pushing the index sharply downward. By the end of the session, the all-share price index had dropped 211 points to close at 17,071 points. Broad-based selling pressure led to declines across almost every sector. Key contributors to the downward included banking sector counters such as Sampath Bank, BFCC Bank and HNB Bank, as well as major conglomerates such as CT Holdings and Hayleys. On the back of moderate retail and high net worth investor participation, market turnover stood at 4 billion rupees, representing a decrease of around 24% over the monthly average of 5.1 billion rupees as well. The capital goods sector was the largest contributor to the overall turnover, accounting for 25%, followed by the diversified financials and banking sectors, which collectively contributed 38%. Top three losers of the day were Tess Agro Non-Voting, Tess Agro Voting and Renuka Foods. Meanwhile, top three price gainers of the day were SMB Finance Non-Voting, ASPH and UB Finance.
Sri Lanka saw 114.6 billion rupees in treasury bills with mostly stable yields. The 3-month and 12-month yields held steady while the 6-month yield rose slightly. Bids totaled 217.6 billion rupees. And for further insights, we speak with Akna Tennakon from First Capital Holdings.
Thank you, Anuradhi. Today, the Central Bank of Sri Lanka conducted its weekly treasury bill auction, raising a total of 114.6 billion rupees against the initial offer of 132 billion rupees. The 3-month maturity raised 31 billion, higher than the initially offered amount of 20 billion rupees. The weighted average yield for the 3-month bill stood unchanged at 7.55%. Moving on, the 6-month maturity raised 64.3 billion rupees, also higher than the initial offer, which stood at 62 billion rupees. The weighted average yield for this maturity inched higher by 1 basis point to 7.73%. Finally, the 12-month maturity raised a total of 19.3 billion rupees, significantly lower than the initial offer of 50 billion. Weighted average yield for this maturity also stayed unchanged compared to the previous auction at 7.94%. Thank you.
Gold prices remain largely unchanged in Asian trading today as investors adopted a cautious stance ahead of the US Federal Reserve's interest rate decision later in the day. Meanwhile, safe haven demand continued to find support from rising geopolitical tensions in the Middle East. Spot gold held steady at $3,388.25 per ounce, while August gold futures similarly muted at $3,405.95 per ounce. Earlier this week, gold gave back most of its recent gains following reports that Iran was exploring a potential ceasefire. However, renewed military escalations, now entering a sixth day of aerial exchanges between Israel and Iran, have reignited risk-off sentiment in global markets. Safe haven flows were further bolstered by US President Donald Trump's strong warnings aimed at Iran amid reports of possible direct military involvement in the conflict by the US. Oil prices eased in Asian trading today following a 4% gain in the previous session as markets balanced concerns over potential supply disruptions from the Iran-Israel conflict against anticipation of the US Fed Reserve's upcoming interest rate decision, which could affect oil demand. Brent crude futures slipped 0.5% to $76.10 a barrel, while US West Texas Intermediate crude fell 0.3% to $74.61 per barrel. Both benchmarks had initially risen between 0.3% and 0.5% in early trading. The geopolitical tension intensified after US President Donald Trump called for Iran's unconditional surrender on Tuesday. Meanwhile, reports from the Wall Street Journal citing an unnamed US official revealed that Israel is running low on its Arrow missile interceptors, raising concerns about its capability to defend against long-range ballistic missile threats from Iran. The Sri Lankan rupee strengthened slightly against the US dollar today compared to the previous day. According to the Central Bank of Sri Lanka, both the buying and selling rates of the US dollar have declined. Let's take a closer look now at how the Sri Lankan rupee is performing today against other major global currencies. Going in for a short commercial break now. More updates on the other side. This is the Nightly Business Report. Welcome back. The Institute of Chartered Accountants of Sri Lanka marked a historic milestone by ringing the ceremonial bell at the Colombo Stock Exchange to commemorate its 65th anniversary.
CA Sri Lanka celebrated its 65th anniversary with a bell-ringing ceremony at the Colombo Stock Exchange. The event was led by CA Sri Lanka President Hishana, along with Vice President Tishan and other senior officials as well. The ceremony symbolises the Institute's significant role in Sri Lanka's financial governance since its establishment in 1959. CSC Chairman Dilshan highlighted the strong collaboration between the two institutions, especially through initiatives like the Tags Awards and integrated reporting. Kurupu emphasised CA Sri Lanka's commitment to empowering professionals and supporting economic resilience. Subha Singh described an anniversary logo as a powerful statement of the Institute's purpose and vision. The event reaffirmed CA Sri Lanka's leadership in shaping the country's financial and professional landscape for over 6 decades.
DFCC Bank PLC has partnered with the Ceylon Chamber of Commerce to integrate the Chamber's macroeconomic and sectoral intelligence into its service model. This collaboration aims to enhance DFCC Bank's expertise and improve client services. The bank will receive quarterly macroeconomic outlooks, sector-specific insights and market intelligence from the Ceylon Chamber. These insights will support decision-making across the bank, from strategy development to client advisory. The Ceylon Chamber will provide briefings on key economic indicators and industry analysis tailored to the DFCC Bank's client sectors. This partnership will strengthen DFCC Bank's position as a customer-focused and insight-driven institution. David Pierce Renewable Energy partners with Sampath Bank to expand affordable solar energy access across Sri Lanka. The collaboration aims to accelerate the country's transition to sustainable and clean energy solutions.
David Pierce Renewable Energy has partnered with Sampath Bank to promote solar energy adoption across Sri Lanka. The collaboration introduces tailored green loan facilities for individuals and businesses looking to invest in solar power. Sampath Bank offers loans up to 5 million rupees at 10.5% interest, with higher amounts available at 11% and special rates for SMEs. Customers integrating solar with home loans receive an additional 0.25% interest reduction. DPRE complements financing with free services including CEB clearance, grid connection, insurance and maintenance discounts. The solar systems come with high-quality panels and inverters backed by long-term warranties. This partnership aims to accelerate Sri Lanka's transition to clean, affordable and sustainable energy solutions. The agreement was signed in the presence of senior representatives from both organizations, highlighting their joint commitment. Together, they seek to empower households and businesses to reduce energy costs and promote environmental sustainability.
People's Bank reaffirmed its industry leadership by receiving top honors at the CRIB CEOs Forum and Institutional Rating Awards Ceremony 2025. The event was organized by the Credit Information Bureau of Sri Lanka, graced by the Governor of the Central Bank as a chief guest, and attended by a distinguished gathering, including JPR Karunaratne, the Deputy Governor of the Central Bank, and the Chairman of the CRIB Board of Directors. People's Bank was recognized for its outstanding contribution to data quality and efficient securing accolades in two of the Bureau's most significant performance categories. These awards underscore the bank's unwavering commitment to data integrity, operational excellence, and adherence to best practices in information management. Notably, People's Bank contributes approximately 4 million transactions to CRIB's central repository, representing nearly 20% of the total data volume, further highlighting its scale and responsibility as a leading contributor to the national credit infrastructure. Resource Energy PLC has connected a 750 million 5-megawatt solar PV plant to the national grid, expected to generate 10 million units of electricity annually.
Resource Energy PLC has connected a new 5 MW solar PV power plant in Derana, Ampara to a national grid, increasing its total supply to 15 MW from 3 sites. The plant, built at a cost of over 750 million rupees, uses tier on 1 solar panels and it's expected to generate 10 million units of the electricity annually. This development expands Resource Energy footprint in rural electrification, feeding a total of 8 MW to the Ampara grid substation. The projects were secured through the government's Surya Bala Sangramya tender aimed at boosting solar capacity nationwide. Despite challenges posted by the economic crisis, Resource Energy now operates 11 utility-scale plants with combined 30 MW capacity. Managing Director Kishan highlighted the importance of renewable energy in meeting Sri Lanka's Paris Agreement commitments and reducing emissions. The new plant provides electricity at cost significantly below thermal power, supporting the nation's goal of 70% renewable energy by 2030.
Siapatha Finance PLC, a subsidiary of Sampath Bank PLC, announced plans to raise a 5 billion rupee debenture through a debenture issue. The board approved issuing listed rated senior unsecured redeemable debentures with an initial offering of 3 billion rupees and an option to extend by 2 billion rupees. The 5-year debentures will offer a fixed interest rate of 11.4% per annum, payable annually. Proceeds from the insurance will support the expansion of Siapatha Finance's lending portfolio. The company aims to promote sustainable growth and strategic investments aligned with its long-term vision. Managing Director Anand Senaviratne emphasized the firm's commitment to financial inclusivity and innovative financial solutions for customers. Let's take a short commercial break. Global business updates on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stock markets were mixed amid rising geopolitical tensions surrounding the Israel-Iran conflict and potential US involvement. Hong Kong's Hang Seng led regional losses, dropping over 1% after continued missile exchanges between Israel and Iran. Mainland Chinese indexes also declined, with the Shanghai Composite down 0.5% and the CSI 300 slipping 0.4%. Singapore's Straits Times Index fell 0.5%, while Australia's ASX 200 and India's Nifty 50 futures remained flat. Indonesia's Jakarta Composite edged down 0.1%, and in contrast, Japan's Nikkei 225 rose 0.7% to a 4-month high, supported by a weaker yen, while South Korea's Kospi also climbed 0.7%. Japan's exports fell in May for the first time in 8 months as major automakers like Toyota absorbed the impact of sweeping US tariffs. The failure to reach a trade deal this week is expected to add further pressure on the country's fragile economy.
Japanese exports fell for the first time in 8 months in May. Figures out Wednesday showed overseas shipments dropping 1.7% on the year. That followed months of gains, but was at least better than expected. The nation's big automakers are in the front line of the trade war. They accounted for more than a quarter of the $145 billion in goods that Japan shipped to the US last year. Now big names like Toyota and Mazda face 25% tariffs on their cars. And the latest numbers show the impact. Japanese auto exports to the US slumped 24.7% last month, with shipments of parts also massively down. Now Japan could also face an additional 24% levy on all goods from July 9th, unless it can strike a deal with Washington. Prime Minister Shigeru Ishiba had hoped that agreement would come at the G7 summit in Canada this week. But he emerged empty-handed from talks with Donald Trump, saying that disagreements remain to be resolved. The hit from tariffs could add to pressure on Japan's already lackluster economy, which has seen growth hit by subdued private consumption. The trade war also leaves the Bank of Japan with a tough call. Does it cut rates to help lift growth, or hike them to cool inflation? This week, the central bank kept rates steady and signalled it would be cautious about future moves.
US retail sales dropped more than expected in May, weighed down by a decline in motor vehicle purchases as a rush to beat potential tariff-related price hikes ebbed.
U.S. retail sales in May posted their biggest decline in 4 months as consumers pulled back on some big-ticket items. A report from the Commerce Department on Tuesday showed U.S. retail sales fell 0.9% last month, more than economists polled by Reuters had expected. Motor vehicle purchases dropped as a rush in previous months to beat potential tariff-related price hikes eased. Sales at building material and garden supply stores also slipped. President Donald Trump's sweeping tariffs have raised fears over global growth, prompting some businesses and consumers to front-load major purchases earlier in the year. Sales at restaurants and bars, the only services component in the report, also declined. Economists view dining out as a key indicator of household finances. But core retail sales, which exclude many of those higher-priced items, ticked up 0.4% in May. Core sales correspond most closely with the consumer spending component of gross domestic product. The Atlanta Fed is currently forecasting GDP rebounding at a 3.8% annualized rate in the second quarter after the economy contracted slightly in the first quarter.
And that wraps up today's Nightly Business Report. We value your opinion, so please share your thoughts and feedback with us through email at feedback.8024english@derana.lk or via WhatsApp at 076-805-7933. We'll see you again tomorrow with the latest updates across the business globe. Till then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a good night.